Happy Monday, everybody. Today is my birthday. I turned 28 years old. So in today's video, we're going to take a look at how we started the day off with a 100% scalp trade that I did live for everybody on Twitch, YouTube, TikTok, everything live. We're going to take a look at that. We're going to take a look at the rest of the market. We're going to take a look at the S&P 500, the NASDAQ 100, the dollar, the VIX, the bonds. We're going to take a look at everything, put it all together, and hopefully we'll get a better understanding of what is to come next. All right, so thank you guys so much for all of your love and support this entire journey. None of this would be possible without you guys and your support and your kindness and your good-hearted nature, because even when I make mistakes, you guys are still there. So once again, like, none of this stuff is possible, and the rest of this year is going to be historical in terms of retail trading forever. And I've been telling you guys this, and next few months are going to be wild. So thank you guys so much for your love and support. Let's get started with the video. All right, so what I'm going to start doing is I'm going to make a separate video daily only talking about the trades that I take. Okay, so what I want to do today is just talk a bit about one trade and talk about it specifically of why I took it. In the future, I'm going to talk about in detail all the different trades that I take daily. All right, so this was my first trade that we took of the day. All right, so I'm going to give you guys an understanding, and I'm going to contextualize as well as I possibly can my thought process heading into the day. All right, so number one, first and foremost, before day trading, doing anything, right, the first thing that you have to do is look at the overall trajectory of the market. Okay, so clearly, on Friday we closed very, very strong. This is the daily chart of the S&P 500. Okay, on Friday we closed very, very strong, right? We were at a very close level of resistance as well, and basically I was a bit bearish in terms of my bias heading into today. And the NASDAQ, the SPY, the IWM, everything, the IWM also opened up lower. Okay, so the IWM was the main factor of why this move to the upside happened on Friday. So I saw pre-market, the IWM was red. I also saw, obviously, aside from the SPY, Apple was also skyrocketed outside of the upper level of the Bollinger Band. And I knew that this was not going to be sustainable. So we were trading the SPY on the 1-minute chart. My bias heading into today was bearish. Okay, we're at a level of resistance. My bias was bearish. Cool. So let's go to the 1-minute chart. All right, very simply. So now we're looking at the 1-minute chart here on the SPY. All right. So I didn't take any trade for the first 30 minutes. I didn't take any trades the first 30 minutes. We missed this trade here. There was some. It was basically the market was messing up. My internet was sort of messing up as well. TradingView had a really weird candles. The charts that I was looking at just looked weird. So once that got figured out, after that, that's when I started to look for trades. I reset my internet, whatever. So the first instance into the day, we started to see a bounce, some strength. I knew that this was not going to sustain itself, and I was just waiting for a good opportunity to go short, because heading into the day I was already bearish. My bias was already bearish. Okay, so what I was just looking for were levels of resistance that were holding as resistance, and simply I was just going to go short at those levels of resistance with a stop loss above that level. Very, very simple. That's all I was going to be doing. So my internet was messed up, and we missed this trade. So I didn't take this. Cool. I also, obviously, I didn't go long here. And once it broke above, so here's the thing. We missed the initial drop down. That's fine. Okay. Now, once we started to bounce up, okay, by 10 a.m., there was also news coming out at 10 a.m. So I was also a bit wary of entering. I didn't want to enter into anything, and heading into news, I never hold any position. So after 10 a.m. news, we spiked up dramatically. once again, we spiked up dramatically. We had resistance at 429, and we were starting to reject that level of resistance. And very, very simply, I entered short at 10:02 a.m. on this big red candle here. So the reason why I entered at this candle was, once again, my bias was bearish. On the daily candle, we were already very, very overextended to the upside. So I wanted to enter at a level of resistance and have a stop loss above that level, very, very simply, and play the downward momentum. That's all I wanted to do. And earlier on in the day, prior to the news release, we saw already that this level of resistance failed dramatically, and we fell very dramatically off of this level. We had a push in the morning and failed. So I'm going to play that again, okay, when it comes to it. So at 10:02, we started to paint a very big red candle, and we started to reject off of this 429 level. 429, again, on the stream, I was saying 429.16 was a very major level of resistance. That had started to fail. So I entered into a short here. And it was a riskier trade because we were not that close to a level of resistance that I would rather have shorted against. So we printed a big candle all the way to 429.50. And regardless, by the time I entered, we were trading within 428.90 in the 428.90s. Okay, so we were about at least like 20 or 30 cents away from the stop loss area. And if we really wanted to be like true to the stop loss, it would be at least like 50, 60 cents away. So with options trading, that's a problem, obviously. 60 cents away, 40 cents away, that's the difference between like a 20% loss. So if you had entered over here at 428.90s and we got a bounce up, we're losing out on like 30% of the contract, 20 or 30% of the contract, almost instantly within this minute. All right. And that's why it was a very, very risky trade to take, because we were already so far away from this level of resistance that I wanted to short against. Right. So it was a risky trade, but you had to take it. And the reason why you had to take it was because we were at a level of resistance. The daily chart was already very overextended to the upside, and there needed to be a pullback. The IWM, which was the biggest winner, was showing weakness, and we just rejected off of this level of resistance at 429.16. So you have to take it. We had a very big red candle as well, and at that point, you take the trade. If it doesn't go in your way, it doesn't go in your way. It is what it is, and worked out perfectly. This ended up going to 97%. We sold the entire position at the bottom. I wanted to go long. And I worked out beautifully. So essentially, the reason why I knew it was the bottom as well is because I was waiting for a leg down. And yeah, like as soon as we broke the prior low of day, I said during these 2 minutes right here, I was saying this would be the time when you take profit, because we had another leg down. By the time we broke the low of day on this candle so far, right? The low of day was at 957. By the time we broke below that low of day, many people, at that point, you're like, wow, okay, I'm going to go short. But that's the perfect opportunity for them to rip it up. For all of the late bears, everyone that goes short at that moment is a late bear, and you're not supposed to essentially go short when the move has already happened. You are already like going short down here is way too late, and you already missed out on this entire move down. So you don't want to go short with momentum. The safest opportunity to go short is on rejections of resistance. So right here, if this is like a resistance level, you would want to go short when a big red candle happens at a level of resistance, so that you could go short and have a stop loss right above this level of resistance. Very simple. And you have some wiggle room. The closer you get to this level of resistance, the more wiggle room you have in terms of your option contract. If you end up going short down here, then like on this candle here, you're already much further away, and it's riskier because they could pull it up. So on weakness, on bearish days, you want to enter at levels of resistance as it's falling, and then on bounces up, you want to go short again when you get a bounce up. So you could go short as it's bouncing back up at levels of resistance. You don't want to just blindly go short alongside momentum. Okay? And the same thing applies to bullish moves. You generally do not want to go long as momentum is already breaking into highs. What you want to do is go long at levels of support so that you can have a tight stop loss below that level of support, and basically just go long at levels of support and have a good risk management. That's basically it. I hope that made sense. This is a sort of trade that you could basically make all the time. And I hope you guys enjoyed that. So now that's basically going to be a gist of how like my videos are going to go daily. If you guys enjoyed it, and if you guys liked my thought process of why I'm explaining everything properly, and if I could do better, or if I'm not doing it properly, like, please let me know, because I really want to start explaining in detail my thought process for every single trade for the day. And if there's anything I could do differently, please comment. And if you enjoy it, also please comment, because I read all the comments, and it's important to me because I don't want to waste anyone's time. And I just want to make things the best. So yeah, there's that. There's my reason for why we entered that trade, and it worked out really, really well. So yeah, that was the first trade, my birthday trade. It worked out. So yeah, there's that. So now we can start with the rest of the video. We're going to talk about the entire market and go over my thought process of what the next steps are for the market. All right. Hello, hello. All right, I hope that doesn't happen again. But yeah, so now I think my mic is working. I don't know how much volume went away, but now that it's working, I hope yeah, I'm not sure when it went away, but if there's anything that I could do better in terms of making the videos explaining my trades every day, please let me know. Please comment below, and just let me know what I could do better. And if you guys enjoyed it, also please comment, because I read all the comments. But yeah, all right, so now that it's working, the first thing that I want to talk about is the treasury bill issue that was happening. All right, so when we increased the debt ceiling on like the US Treasury, right? What ended up happening was we need to restock all of the bills that were basically there. So the treasury was almost down to $0. So to rebuild that stockpile of treasury bills back up, we need to buy more treasury bills. And to buy more treasury bills, we need to sell other assets, namely equities. So we need to sell basically stocks. Okay, so what people are saying is that we need to basically, so essentially right now, there's $1 trillion treasury vacuum coming for Wall Street rally. All right, so post-deal supply surge will rumble through stocks to credit. Already eroded liquidity set to shrink by $1 trillion. Okay, so with a debt ceiling deal freshly signed into law late Saturday by President Joe Biden, the U.S. Treasury is about to unleash a tsunami of new bonds to quickly refill its coffers. Okay, so that's basically what's going on. The sale, set to begin by Monday, will rumble through every asset class as they claim an already shrinking supply of money. JP Morgan estimates a broad measure of liquidity will fall 1.1 trillion from about 25 trillion at the start of 2023. Okay, so equities have suffered when banks tumbled. Okay, right, but this is essentially quarter three. Yeah, so essentially what they were saying is, with default narrowly averted, the Treasury will kick off a borrowing spree that by some Wall Street estimates could top $1 trillion by the end of quarter three, starting with several treasury bill auctions on Monday that total over 170 billion. So today, we already went over almost 20% of what they need to do. And they need to do 1 trillion, they need to buy $1 trillion worth of treasury bonds Or basically just look at it as they need to sell $1 trillion worth of stock. Okay. So that might sound like a lot. That's like, holy crap, we're going to lose the entire market. Oh my God, wow. But we already went through almost 20% because 170 divided by like 17 into 100 is almost 20%, 17%, right? So nothing crazy happened. And this was only over one day. Okay. So they have 3 quarters to buy back $1 trillion. So I don't think it's going to have a huge effect on the market. So this treasury deal, I don't think it's going to be huge because the amount that they're buying back is not going to dent the market. So even when you're looking at the overall market cap of the S&P 500, it's 35 trillion. 1 trillion is less than 3% of the S&P 500, okay? So if you're just looking at 3% of the market, right, from Friday's high, 3% is back to 410, 415. That's nothing, okay? So they have 3 quarters. They have the end of the third quarter to basically do this, and it's not going to be like a dramatic drop, all right? So I don't really think it's going to have a huge effect on the market, okay? So next, before we have some fun and look at the charts and everything, I want to look at the dollar, the VIX, and the bonds. Okay, so right now this is the dollar. So we know that the dollar has an inverse relationship to the market. If the dollar is rising, that means that the stock market is showing weakness. It's going to drop. Okay, so right now we see clearly the dollar showing a lot of strength. We had a pullback and we're bouncing up. This sort of candle here is not what bulls want to see. And it's still showing a lack of strength and a failure to break above levels of resistance. For me to be comfortable, to be very bullish on the dollar, and for this to really permeate into weakness on the stock market, because we're looking at the dollar, basically, what we're doing is we're looking at the dollar, the VIX, and the bonds to see if strength and weakness in the dollar, the VIX, and the bonds will translate into equities. So we're trying to get more data points. So the dollar is one of those data points. Essentially, we want to see if the dollar is going to start showing a lot of strength above levels of resistance. And if it does, then that is going to cause us to drop on the stock market, in my opinion. So right now, we're not seeing that. We're not seeing the dollar completely bounce and really break through any levels of resistance, okay? We're seeing the dollar pragmatically. What this is that the dollar is showing weakness at levels of resistance. If it continues showing this weakness, then that means that the SPY has more room to go up, okay? So currently, the dollar is showing some weakness at levels of resistance, which is bullish for the stock market. Next, let's take a look at the VIX. All right, so the VIX. So the VIX, we know, has an inverse relationship to the market as well, similar to the dollar. So if the VIX is falling, that means that the stock market is doing very well. Okay, opposite. So on Friday, we saw that the VIX was very overextended to the downside in terms of the Bollinger Band. So the Bollinger Band is this indicator that I have with the blue lines. And we can see that the lower level of the Bollinger Band, we were closing outside of it. When we are closing outside of the lower level of the Bollinger Band, it shows extreme overextension to the downside or the upside, okay? So we saw that Friday. And what ended up happening today is we bounced up and there was a lot of volatility. So we bounced up and we closed downwards again, right? But what this did instead is the Bollinger Band sharply fell lower and much faster compared to the price of the VIX falling lower and faster. So this is actually very, very bullish for the stock market. And this isn't really good for bears because the Bollinger Band is falling much more faster than the VIX can fall. And it's going to take a dramatic move to the downside on the VIX for us to become overextended again. Does that make sense? Because you can see that we had an overextension to the downside on Friday, but we bounced up all the while the VIX was, all the while the lower level of the Bollinger Band was falling down very sharply. And even today, we had a bounce, but then we fell. But now we're closed within the Bollinger Band. So it's showing that there's still way more room to fall to the downside on the VIX, which essentially means that there's more room to go up on the market before we get very overextended. So this is the sort of setup that catches people. This is the sort of setup that basically catches people to be this is the sort of setup that basically catches people to be very bullish on the market, because there is clear weakness. You know, I don't want to dive too deeply into it, you know, where I'm not really swinging anything crazy. But the VIX and the dollar are both showing clear weakness. And with those clear weaknesses, it is good, technically. It's good for the stock market and good for stock market S&P 500 bulls, okay? So next, let's take a look at the 30-year bonds. The bonds generally have a more correlated relationship to the market. If the market is doing well, that means that the bonds, if the bonds are doing well, that means that the market is doing well, okay? And you're not getting too much out of the bonds. We saw a bit of a reversal here, but the bonds acted earlier before the market skyrocketed. So the bonds were bouncing much harder before the market did. So essentially, you know, this is looking like a bit of a bear flag. We need to break back above 128.10 on the bonds and see if we could get a move to the upside. But the real story was being told by the dollar and the VIX. The bonds aren't really telling us that much at the moment, in my opinion. So next, let's just take a look at equities and the stock market in general. So number one, I want to take a look at the IWM. Does this look like a continued move to the downside for tomorrow? Yes, I would argue that the IWM can continue moving lower tomorrow. Okay, so what we saw was 2 days. So we opened outside of the upper level of the Bollinger Band today, and we rejected off of it and just completely fell back inside. Okay, so the Bollinger Bands are a good gauge of returning back inside. So if we're trading outside of the upper or the lower level of the Bollinger Band, it's a good chance that we revert back inside and we close back inside. So this happens mostly on the indices. So the SPY, the NASDAQ, the IWM. It's also happened on a lot of trillion-dollar companies, but namely the safest trades are on the SPY, the IWM, and the QQQ. So the IWM, we're obviously bouncing lower, right? So this is, and the IWM was the main reason why we completely skyrocketed, because the debt ceiling increase was bullish for banks. So with the IWM showing this weakness, clearly this is very similar to the setup that I did earlier in the morning. On a 1 minute time frame, we failed and we rejected off of a level of resistance. Very simply, right? 180, 140 was a level of resistance, and we rejected off of that pretty perfectly and painted a red candle. This is the moment where you would generally go short, right? And for a continued move to the downside with a stop loss above here. So this is not a bullish setup, okay? So what now we need to see is if this 178 level can hold on the IWM. If 178 can hold, then yeah, like, you know, we can continue back up. But I think we need a retest of 178. This is too bearish of a setup in my opinion, but we have to roll with the punches. If they end up bouncing it off or just gapping it up, that would be really weird in my opinion. But overall, this is a bearish setup on the IWM. It's this is not a bullish setup. Let's just keep it at that. All right. So now I want to take a look at the NASDAQ. The NASDAQ made a high today, obviously, and closed lower than Friday's high. So this is not that bullish either. But the NASDAQ was not the biggest loser. The IWM was the biggest loser. So compared to the SPY, the NASDAQ, and the IWM, you could see was 1.34% loser. And the NASDAQ was actually the only indice that did well. So essentially, we need to see if the only way the market is going to continue showing strength is if the IWM can hold 178 and if the NASDAQ can continue showing strength. Or if the NASDAQ can hold 353 and 350, 352 and 353, these areas here, and continue going up while the IWM holds support. So now it's just a game of funneling money back into the market and doing it in waves. So money flows into the losers, and as those losers become winners, it flows out of those winners and flows back into the losers, etc., etc., etc. So We already saw cycles. We saw Nvidia, AMD, Microsoft, and Google leading the market. We saw them absolutely leading the market. You can see Nvidia skyrocketed up, AMD skyrocketed up, right? Google skyrocketed up, and Microsoft skyrocketed up. Okay. Once they started to show weakness and a bit of like some red candles, that's when, because Apple was not doing well. Apple was still stagnating in a range, blah, blah, blah. Once the large AI companies started to show weakness, that's what gave room to the Apples to start skyrocketing. That's what gave room to the Teslas to start skyrocketing. That's what gave room to Facebook, Meta to start skyrocketing, right? So money flows in and out of winners and losers. So the reason why these tech stocks did so well is because Nvidia was still holding above support. It's because AMD was still holding support. We haven't broken below the lows of when we gapped up. So all of these stocks, Google obviously still holding support, Microsoft still holding support, right? The winners were still holding support while those losers were rallying up. So it happens on a larger scale as well for the Russell compared to the NASDAQ as well. So we need to see if the Russell can hold support or skyrocket up. And we just need to see the NASDAQ and the IWM taking turns, bouncing and holding support for a continued move up. We see that the VIX is still showing there's more downside room. So the VIX is showing that there's more upside room for the stock market. Okay. And we see that the dollar is showing weakness. So if the dollar is showing weakness, that also means that there's more upside room for the stock market. So just keeping that in mind, there's still upside room for the stock market. The IWM already reverted back inside, but the IWM immediately is not showing a bullish candle. The S&P 500 as well is not showing a bullish candle. We already saw Apple. This is not a bullish candle. Okay, so this is not like a reason to be, oh my God, whoa, I'm going to be bullish. This is on setups like these. This is when you swing short overnight, or the next day is when you have a bearish bias. So we're going to have another bearish bias heading into tomorrow, most likely, unless we show like a crazy amount of strength. But based off of this, tomorrow is also going to be another bearish day. And so, yeah, so very simply, we failed at this level of resistance. This is the daily chart. Failed at this level of resistance very simply. Painted a red candle here. We saw the IWM already revert back inside the Bollinger Bands. We saw Apple open and then revert back inside the Bollinger Bands. I'm assuming the same thing happens with the SPY. So this is a level that you're basically bearish at. You're short overnight on this level, and this is a bearish setup. If we end up ripping up, it is what it is. But on the 1 minute time frame, things like this is when you go short. Very, very simple trade. Textbook short opportunity. But the only issue is that the VIX and the dollar are showing bullishness for equities. But overall, I had a drawing. I deleted it. But I was showing how 426 needed to hold a support today for a continued move up. Technically, we held 426. So the things that need to hold support are holding support. And below 426, then obviously this is a gap that needs to fill here at 422.92, which is the high of this June 1st candle. And then the low of this June 2nd candle, which is 423.95, which is 424. So 426 and then 424 are the two major levels of support to the downside. And then the 423 level that needs to be filled to the gap. If those things can hold the support, we can continue moving up. But overnight, this is not a bullish setup, in my opinion. Most likely heading into tomorrow, we're going to continue having a bearish bias. And essentially, above 428, there's no real levels of resistance until 438. So, of course, 430, 435 are two major psychological levels. But in terms of big orders, 438 is basically the only level above that. So we're showing levels of resistance. We're showing weakness at levels of resistance. So we're going to be short. At levels of support, that's when you go long. But you're not going long on rejections of resistance. You flow with the money. You go with the flow. the IWM is showing weakness. It was the big reason why we had this big bounce up. So you're keying off of that weakness and you're seeing if you could play short. But aside from that, if we get a big gap up, you know, if we get a big gap up, then sure, we can play long. But overall, so far for now, it looks like I'm going to be bearish heading into tomorrow. I hope you guys enjoyed today's video. Yeah, man, thank you guys for your support and your love. Please make sure to like, comment, subscribe. Please let me know if you guys enjoyed how the setup and everything was. I hope my mic didn't go out while I was explaining things, but yeah, aside from that, thank you guys for watching, and I will see you guys bright and early tomorrow morning. Have a good one. Thank you.